Considering how crazy the real estate market has been over the past couple of years, the question we're going to look at today is it better to rent or buy a home in 2022? Hi, this is Andrew with the S2 real estate team with eXp Realty. And, even though the market's been crazy over the past couple of years, things have really kind of come to the forefront lately as home prices and mortgage rates have been moving up. Home prices have been moving up for a while now, as we know, but mortgage rates have really started to make an increase. Not only that, you've got this little thing called inflation out there that the Fed has been telling us for quite a while is transitory due to the pandemic and everything that's been going on. But it doesn't appear to be quite as transitory as they thought it was. And they recently just announced that they're going to be making adjustments and raising the interest rate this year in an effort to combat inflation. Now, if you'd like more information on how that is likely to affect a mortgage rate, I've put a link in the description below to the video I did last week that specifically talked about mortgage rates and the housing market in 2022. So back to this question on rent versus buy. I bring that up because, to be honest with you, if you don't, everyone's got to live somewhere. So if you don't buy a home, then you need to rent a home unless you're living at your parents' home. So one of those scenarios is what's going to take place. But some of the people that have been calling me and my team over the past couple of weeks have really been asking the question. I mean, everything's getting more expensive. They go to put gas in the car, it's more expensive. Food is more expensive. Clothes, on down the list. So they get worried. Everything's more expensive. And, homes are more expensive. And now mortgages are getting more expensive. I can't do this. So if I can't do this, maybe my better option is just to rent. Now, if you've seen any of the videos I've produced over the years, you will know that in sharing this information, I don't try and convince you one way or the other. You need to make the best decision for you. What I do want is you to make that decision based on the best available information, which is what I want to share so that you have all the facts. When it comes to topics like this, people have a habit of getting very tunnel vision, right? They get very focused in on just a little piece of it. What I want to do is say, let's take a look at the big picture. Let's look at the overall plan. Let's think about this on a more long-term view and marry that to your goals. Everyone's are different, but let's take a look at yours and how that might play out, especially today. Well, we know about home prices, right? But one of the things that hasn't been talked about a lot or hasn't got anywhere near as much attention in the media is rent. Rent has been skyrocketing. As a matter of fact, the latest information from CoreLogic and the rent index that they produce shows that rent has gone up in the last couple of months at the fastest pace it has in 16 years. It follows, or it makes sense, doesn't it? It's demand for housing, right? If someone has been in the market to buy and can't buy because there's no supply, or they've really struggled with finding a property, then they rent. But those rent prices have been going up. So because the demand for housing has been so high overall. And then you've got this inflation factor, which I want to go back to and touch on now. So I'm going to share my screen with you and give you some additional information on what some of the experts are saying, and also show you some historical comparisons on what's going on with relation to home values in inflationary times. All right, so first and foremost here, I've got this quote from Mark Cusson is a financial writer for Investopedia. And he says, real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. And, I can understand that you may say, well, I've heard that before. I've heard that before, but look at all the people that got burned in the mid 2000s. I was one of them. I'll be honest with you. I owned a lot of property in the mid 2000s and I lost a lot of property in the mid 2000s. Um, but it overall, there's more reasons on why I lost some of those properties. So I'm sharing some of what I went through. So hopefully you don't do the exact same thing. But in relation to this, the point being is that over the long haul, real estate always goes up in value. It always has. Okay, so the ironic thing is for many people when they're buying a home, especially if you've never bought a home before, the idea in your head becomes, well, I'm only going to live in this house for a couple of years. And most first-time home buyers or early home buyers drastically underestimate the amount of time that they're going to spend in any one home. So as an example, a vast majority of my life growing up, my family moved every 2 years. We weren't renting, we were buying, but my parents basically bought and sold every 2 to 2.5 years. That is kind of what I became accustomed to. We didn't move quite as much as I got a little bit older, but in general, that's what we did. So when my wife and I bought our first house, my thought process was, oh, well, we're only going to be in this house for 2 or 3 years, and then we'll sell it and we'll move on to something else. Well, I ended up owning that home about 8 years. And what we've seen over time is that the length of home ownership has actually continued to increase. It's now pushing 9, 10 years on average. So you're going to be in the home, chances are, much longer than you think you are. And here's why that's important. So here's a look at home ownership as a hedge against inflation. It's comparing the home price appreciation versus the consumer price index, the inflation numbers over the decades. So you can see in the 1970s, the green bar here is home price appreciation. The blue is inflation. Home values outpaced inflation in the 70s. It's fairly equal in the 80s. It outpaced it by 1% in the 90s. The 2000s, let's pause on the 2000s for just a minute, because as I mentioned, the 2000s is when, as many of you may know, we had a little bit of a housing crash that affected all of the country. But when you look at that decade overall, even when that crash is figured in, home prices still appreciated over the course of the decade at an average of 2.3% a year. Nothing massive, nothing to write home about compared to what we've seen the last 2 years. But still, it's something I just wanted to point out. As you can see again, in the 2010s, home prices outpaced inflation. Obviously, in 2020 and 21, it substantially outpaced inflation, and it looks as though it is going to be again in 2022. So why is that important? Well, understand that when you get a mortgage, that mortgage rate, your housing payment is fixed for 30 years. You're in control. You know exactly where it is. Inflation isn't going to affect your mortgage in any way, shape, or form. That's your payment. Yes, taxes and things will change and other expenses can change, but the payment won't. Whereas while inflation is running high, properties tend to increase more than inflation does at that same point in time. So here's what James Royal, the senior wealth management reporter for Bankrate, had to say. A fixed rate mortgage allows you to maintain the biggest portion of your housing expenses at the same payment. Sure, property taxes will rise and other expenses may creep up, but housing remains the same. Now, how many of you can say that for rent? You can't. Rents are going up. They're drastically going up, and they have been year over year over year, especially lately. Some of the rents I am seeing housing getting now, and I've been in this a long time, I'm flabbergasted. I mean, as I told you before, I lost a lot of property in the mid 2000s, and a lot of that property I lost was because it didn't cash flow very well. I mean, I was buying it for the appreciation that was there, but when I rented it, I was still upside down and writing checks every month. Right. So that's one of the things I did. And it was a mistake that I made. Learned that lesson. But rents now, I touched on this a few weeks ago. It's also one of the reasons supply is so low currently. So somebody that bought their first home 5, 6, 7 years ago, With mortgage rates down around 3%, when it was time to move to a larger, bigger home, they were able to refinance their mortgage at this great low rate, pull out equity, use that equity as a down payment on their next home, and turn that first home into a rental. And it cash flows nicely. Now they're building long-term wealth in a property that isn't costing them anything on a monthly basis and is actually putting income into their pocket. That's a whole other scenario, but another reason why supply of homes has been so low. That's been a trend that's been ongoing, but I digress. Look at what rent has done, though, in comparison to inflation. If we use that same thing with regards to property prices, home values, let's look at it with regards to rent. So core inflation is the blue line, and rent appreciation is the green line. So as you can see here, although it spikes up and down, it's a lot more volatile. Overall, between 1973 and 2020, rent has actually outpaced the pace of inflation. So the amount that rent is going up, it's going up faster than inflation has. So rent continues to get more expensive, and you're not able to fix any of those costs. The minute your lease is up, that rent can change on you, right? Just something to keep in mind. And then here, one thing to look at again, it's the same, a different quote, but it's the same message. It's Natalie Campisi from the advisor staff at Forbes. Homeowners are shielded from mounting rental prices because their cost is fixed, regardless of what's happening in the market. Tangible assets like real estate get more valuable over time, which makes buying a home a good way to spend your money during inflationary times. And then wrapping up today, I want to leave you with this. I am certainly not indicating that the real estate market is forever going to go up. It's been a unique situation, but we've got rising prices based on supply and demand. We have a massive imbalance between supply and demand. In the mid 2000s, early 2000s, we had a whole lot of artificial demand. It was demand created by exotic mortgage programs that anybody and everybody could get a loan. I told you I had multiple properties. I should not have been approved for all the properties I ended up being approved for. I shouldn't have. I couldn't technically afford them, which is why I ended up losing them. But again, in this particular case, we're not seeing that now. Mortgages now, you actually have to qualify. I mean, novel idea, isn't it? So it's very, very different. The demand that we've been seeing over the past few years isn't artificial. You've got millennials, the largest generation, approaching prime home buying age as we've had falling supply. So healthy, normal, good demand, low supply, prices go up. But with that in mind, there will be more cycles. It's natural. There will absolutely be more cycles. But recently, the home price expectation survey for Q4 just came out. I've touched on home prices before, but this one for Q4 went through and asked all of the leading economists and housing experts in the country what you think cumulative home price appreciation based on what's known today is going to be between now and 2026. Here's what they had to say. Now, even the pessimists, the most pessimistic of all people, think over the next 5 years, home prices are still going to increase by nearly 24%. When you've averaged all the panelists together, you're just over 43%, and those that are the most optimistic, that's 62.5% cumulative appreciation over the next 5 years. I agree. That's a lot. That's a lot. But I'm more interested in what the pessimists, even those that are looking for something to go wrong, their glass is always half empty. They're looking at all of that, are still thinking that over the next 5 years, we're still going to see home price appreciation cumulative of nearly 24%. That's a big number. So it makes a huge difference when you've got that type of appreciation continuing over the next 5 years. So again, why do I share this information? No, I'm not saying you should try and buy a house right now if you're not ready to buy. But what I'm saying is keep in mind that home prices always go up over time. They will go up and down, but generally that curve is always up. It is very, very difficult to buy a home right now in the vast majority of the country. I know that. But there are ways to make it happen. There are ways that it works. And is it for everyone? No, it's not. Only you can make the decision on whether or not it's right for you. So, if this information is helpful to you, give me the thumbs up on the video. Go ahead and subscribe to the channel. You'll be notified every time I put additional videos like this out. And if you have any questions whatsoever, me and my business partner, we're always happy to talk to you, share some thoughts, share some ideas, talk through a scenario, and give you the information you need to make the best decision for you and your family, because that's what's most important. You can reach out to us at 888-447-9650 or send an email to contact@s2realestateteam.com.